Hello traders, this is an early version of Currency Watch. Wake up call. We are going to go through the pairs that are of interest heading into non-farm payroll. Today my trade in the Great Britain pound cross was knocked out. I felt like a loser. That's why I was listening to that song. It has been one of those last couple days have not been very profitable, but I've only taken small losses, which can easily be made up in the short term. Trading small with the expectations of the volatility to continue heading into tomorrow. Today's trading was interesting because Draghi came out with his press conference and he basically rehashed the rumors that we had established from yesterday. But they did keep interest rates unchanged, but in the eurozone. This was basically the scenario I had given, and most traders had thought that would be negative for the euro. But the problem was that earlier before that, the ADP number came in better than expected, and ISM came in later around 10 better than expected, which helped push the yen crosses up in an aggressive fashion because it diminished the possibility of additional quantitative easing going in. It would diminish the possibility of quantitative easing and actually just increased expectations for a better non-farm payroll report. Well, now this is what I believed helped the equity markets rally, and so when the euro and pound tried to fall lower, they had to give into the pull from the ISM numbers and the equity markets moving, and most pairs kind of whipsawed back to right around where they were to start the day. Now heading into tomorrow with a non-farm payroll, better than expected number would probably lead to a strengthening of the dollar, with a inline or lower than expected number would probably lead to increased quantitative easing expectations and a further follow through, and most of the majors gaining strength against the US dollar. So let's take a look at a couple of the pairs that are in interesting positions. The Euro USD obviously is up near the top of the trend line that is contained since the last October. If we get a continued momentum at this level with a weaker than expected non-farm payroll report, the pair could easily move up towards the 126.90, 127.50 over the next day or so. But if the number comes in much stronger than expected, we could see a total rehash of the move lower, and we could see a move all the way down towards the 124.80 level over the next day or so. The CAD is in a very interesting trading position because you can see it's right down here at the bottom of its range between 98.40 and 98. A break below this level will push the pair all the way down towards, we'll break new yearly lows and we'll open up the way maybe all the way down to the 94 level. But if we get a hold here with a better non-farm payroll number than expected, we could see a bit of a rebuttal here and see the pair rehash its losses and move back up towards the 99.50 area or 99.50 area over the next few days. Now the real pair to watch during all this action would be the USD JPY, because it has the purest reaction to any sort of trade, because it's not diluted by China or by European markets. And you can see with the expectations of diminishing quantitative easing coming in, or a higher than expected non-farm payroll report, you can see the pair moved up aggressively today, well, aggressively for the yen, and it's definitely bounced from its resistance level at 78.15. It is now moving up even higher again now to the 78.90 area. It moved up to 78 and found a little bit of resistance, move higher, lower. If we get a news tomorrow that quantitative easing with a firmly better than expected ADP report, we could see that the cross could start drifting higher all the way back towards the 80-60 level over the next few days. Now if the number is worse than expected, the pair could move down, and we could see just this general move down towards the 74-75 level. And of course this would also bring in expectations of, or rumors and talks of, intervention once again in the yen pairs, which make them difficult at best to trade. The next pair we want to take a look at, not that they're in great trading positions, just so you know the support and resistance, is the Aussie USD. The Aussie USD, it moved up, and it's moved up all the way to resistance at 102.80. The pair could have a bit of a tug of war to even tonight in trading, because the Aussie trade balance report is due out and it's supposed to be a negative 300 million, and this report could give a better picture on the trade flow between its largest partner, China, and we could see a bit of volatility due to that. But based on non-farm payroll, if the number is better than expected, we could see the increased, better than expected, we could see increased dollar strength, and we could see a continued move lower in this pair against the dollar, and a break below the 101.75 opens 101 and then parity. But then again, if it comes in with better expectations of quantitative easing, we could see a move up and move towards the 103.50, and then ultimately all the way back up to a 105.30, because these pairs are going to have the biggest moves based on biggest moves because of the volatility in commodity pairs. The New Zealand is the same exact trade. It moved up to resistance. It's at 80.30, a break higher with additional expectations of QE with a bad non-farm payroll number. We could see a move back up towards the 81, 84, 82.35 zone. But if not, if it has a stronger number, we could reverse all the way down to 79. And the Great Britain cross pair, the trade I was in earlier today, it broke down. It moved down to 158.80. I was looking for just a little bit lower to go break even, and then it's moved back up and it's above the 159.04. It was a classic short squeeze that happened right there, and now it's probably going to consolidate throughout the night between 159.04. I'm not going to put any trades on before non-farm payroll because I don't want to get whipsawed out of them in early European trading, which has been my problem the last 2 days. But you can see the pair is basically trading quickly, rapidly higher, and it will take a reversal of sorts to push the pair back. If we get a stronger non-farm payroll number, we could move all the way down back towards this 158.30 level, and then we'll be looking for a break of the trend line for a move down lower. And of course, we could be moving up, move all the way up to the 160.50 level over the next few days. Now, another pair that's in a compelling situation that we're going to definitely keep an eye on going into the non-farm payroll is the Great Britain JPY, because you can see this pair is sitting right up on the trend line that has contained its move down since last March. So we'll definitely be watching this and watching the yen strength, and if we get a break higher, we could see a rapid move up towards the 127.50, but a move down, we could be all the way back down to the 124 level before we know it. So this is actually one of the better setups heading into the trade. And the Euro JPY just is very similar to Euro. It broke out of the triangle higher. We're going to watch this for a move back down to the 99 level, or if it breaks above 100, we could be up to 101. The rest of the yen pairs, we have basically trades already happened. The Aussie JPY, we actually talked about it in this morning call yesterday. It moved down towards trend line resistance, and now it broke up almost 100 pips today. The trade is basically done there, but we could see a pushback down towards the trend line if we have a worse than expected number, and we could see weakness in the yen and see a sell-off across the board. And the New Zealand and CAD, there's really no trades there. They're just mongling along. They're still within their pivot zones. So in a rehash, we're going to look for non-farm payrolls, a better than expected number, and a much better than expected number. We could see quantitative easing expectations come off the table, and we could see a rally in the dollar across most of the majors. The pairs I'm going to be looking at to trade in tomorrow, if in such a case, would be the Euro JPY and the Great Britain JPY and the pound. The pound, which isn't showing up. The pound cross. The pound cross. Yeah, let's say the euro cross, which is because we could see a quick move lower in that pair. And of course the pound I'm still a little bit interested in, because if we break below this 0.618 fib, we could be back down to the 50. All right, everybody, I'll be keeping you guys up on the Twitter machine tomorrow morning. Let's make some pips, non-farm payroll. It should be fun.